Hey, good afternoon. Michelle Kuipers here, and I am on day 3 of my 14-day challenge. And I just want to know who wants to have stress-free days at tax time. Hey, Mike, how are you? So what I'm going to share with you today are some best practices in accounting. This is going to be directed probably more towards QuickBooks. However, I promise you that these are useful tips that can be used in whatever accounting program, even if it's Excel. This information is really helpful. So let's get started. Number 1, tell me something new. One of the things I see most often is people repeating in their description. Hey Ramez, hey Vanessa, repeating in the description of their entries the same information that can be found somewhere else. So you don't need to enter the date, the vendor, the payment method, the account category. You don't need to enter that again. But what you should enter best practices are the purpose of the transaction. If it's for, let's just say meals and entertainment. Well, it wouldn't be entertainment since we can no longer do that. Thank you, IRS. No longer entertain clients. But if you take a client to for a meal, you should include always who was there and what was discussed. That's best practices. You want to answer the questions that would be asked by, number 1, your management team, auditors, IRS, internal auditors, your sales tax auditors. Hopefully none of this would happen, but you want to be prepared with all those answers. And I have seen audits go really fast if you've got all this information in there, and they just kind of they just go. You don't have any problems. And then lenders is the other thing. So number 2, best practice, incoming, outgoing funds, 1-step, 2-step. So QuickBooks has methods of how to make these entries. And let's just go with incoming funds, deposits. There's a button that says make deposit, and that's a 1-step. And you're going to use that for your interest deposits, your refunds, your owner's investments, your rebates, that type of thing. That's just a quick deposit. Sales receipt, you're going to use that button if it is sales paid at the time of service. So nonprofit would also use that for sale, a donation receipt. And that's a 1-step, that's a quick deal. You're going to use the 2-step, which is the invoice and the receive payment, if it's for sales that are made at with terms. So they're going to pay you in 30 days, or if you have multiple payments. So you might sell something for $10,000 and they're going to pay you over the next 3 months. So that's when you are going to use the invoice and receive payment method. Hey Nancy, how are ya? Outgoing funds, the same here. Expenses, you're going to hit the button that says expense if it's a 1-step for debit card transaction, an online payment, a credit card transaction. So those are going to be your expense buttons. And then there's a check button, and you're going to use that if it is a handwritten or a computer generated check that you've created. You're just going to use the check button. You're going to use the 2-step method, which is a bill and a bill payment if you have vendor bills paid in the future and purchases with terms. Again, this is similar to the invoice and receive payment, but now you're going to be making payments on that. So that's when you're going to use the bill and bill payment. And then the last thing, let me just see here, the last thing I want to mention is, big issue that I run into is sales and payroll tax. So it's one of the biggest mistakes, the biggest problems that I find when I'm visiting clients. Hey, Steve, is tax problems. And the way you know that you have this problem is you'll have an account on your balance sheet, and it's a tax liability account, and it keeps going up and it never comes down. Your sales tax liability or payroll tax liability should go up, and then it should come back down if things are working correctly. Because basically that's saying the money goes into the system and then it comes out as soon as you pay it out to the authorities. Many times you'll see this account go up, up, up. And yeah, you just want that to, that kind of is your red flag that there's a problem. The other one is you have an expense account that's overstated. So best practice is to use the system, QuickBooks system. Make sure that that your books have been set up correctly. The only way that this is all going to work is if it's set up correctly. And the sales tax, to set that up, you need to make sure that the sales tax items match how the taxing authorities will collect. So like in Texas, we have different metro tax and this tax, and the part goes to the city. So if it's set up correctly, then that will happen automatically. And then also you need to set up a zero tax sales for sales tax that needs to be reported as a deduction. And a lot of this is too long, too detailed to get into here. I can talk to you later about it. Payroll tax, again, you need to set it up correctly and set it up the way it's collected. And then the other thing, is be sure and set up 2 vendors for the IRS, one for paying your 941 taxes, one for paying your 940 taxes. It makes it easier. You can have just one, but it makes it easier to search it out. And again, you need to make sure that as your rates change for your payroll taxes, that you immediately go in and change those things. So if this was helpful, please share. If you think that somebody else might benefit from it, please share. And the other thing is that if you like organized receipt records, please feel free to reach out, send me a message, because I have got a document that would be a great help. It is 7 tips for keeping your receipts organized, and I promise you that this will make your life so much easier at the end of year, and a lot less stress. So thanks for joining me, and I look forward to talking with you tomorrow. Take care. Bye-bye.